Hello everyone, welcome to the next episode of Weekly Review. This is Cherzobek from CAU Business School. So first, let's review the week from 23rd of December to 27th of December of 2024. The UK's GDP reported a year-over-year growth of 0.9%, slightly below the forecast of 1%, but higher than the previous quarters of 0.7%. Quarter-over-quarter GDP remains stagnant at 0%, falling short of 0.1% expectation. These figures indicate sluggish economic growth amidst ongoing uncertainties in the region. United States durable goods orders for November fell by 1.1% month-over-month, significantly below the forecasted 0.3% and reversing the previous month's growth of 0.8%. This decline signals reduced manufacturing activity and lower business spending during the holiday season. The U.S. Consumer Confidence Index dropped to 104.7, below the forecast of 112.9 and lower than the previous month's 112.8. This decline reflects growing concerns about the inflation and economic uncertainty. On a positive note, U.S. New home sales rose to 664,000, surpassing the previous months of 627,000, although slightly below the forecast of 666,000. This suggests a steady housing market recovery despite macroeconomic challenges. U.S. reported initial jobless claims at 219,000, better than expected of 223,000. This modest decline in jobless claims suggests a stable labor market as the year-end approached, adding a positive note to the U.S. economic landscape. The U.S. reported a substantial draw in crude oil inventories with a decline of 4.237 million barrels compared to be forecasted at negative 0.7 million barrels and the previous reduction of 0.934 million barrels. This sharp decrease reflects increased demand during the winter season, coupled with a potential reduction in production. The tightening supply contributed to upward pressure on crude oil prices during the week. In Europe, Spain's consumer price inflation for December accelerated to 2.8% from 2.4% in November, driven by higher fuel prices. Core inflation also quickened to 2.6%, exceeding forecasts, indicating persistent inflationary pressures in the Eurozone. In Asia, Japan's industrial production in November fell by 2.3% month-over-month, indicating challenges in the manufacturing sector. Retail sales, however, rose by 2.8% year-over-year, suggesting steady consumer demand. China's manufacturing activity slowed in December, with the official PMI declining to 50.1 from 50.3 in November, signaling a deceleration in factory output. Talking about the commodities, oil prices experienced fluctuations during the week, influenced by concerns over supply and demand dynamics. Brent crude futures saw modest gains, supported by expectations of economic recovery in China and reduced U.S. inventories. However, uncertainties regarding global demand and potential geopolitical tensions kept price movements in check. From the currency market, the US dollar maintained strength against a basket of major currencies, supported by elevated treasury yields and expectations of fewer Fed Reserve rate cuts in 2025. The dollar's appreciation exerted pressure on emerging market currencies and influenced global trade dynamics. Talking about the major news, an altercation erupts at a high-level meeting of a Russia-dominated economic union. During an Eurasian Economic Union meeting, tensions flared between Armenian Prime Minister Nikol Pashinyan and Belarusian President Alexander Lukashenko over Armenia's strained relations with Belarus. Pashinyan, attending via video call, declined Lukashenko's invitation to visit Belarus, citing his decision to freeze high-level visits due to Lukashenko's support for Azerbaijan. Lukashenko persisted, even offering to send a plane, prompting Pashinyan to assert the issue was inappropriate for discussion in that setting. Russian President Vladimir Putin and other leaders observed the exchange in silence. The union, aimed at boosting economic ties between ex-Soviet nations, has faced internal disputes and political friction among members. Russia targets Ukrainian energy infrastructure on Christmas Day. It launched a massive missile and drone attack on Ukraine's energy infrastructure on Christmas morning, targeting thermal power plants and leaving 500,000 people without heat in Kharkiv. The assault involved 78 missiles and 106 drones, with Ukraine intercepting 59 missiles and 54 drones. One person died in Ukraine's Dnipro region, and heating was disrupted for 155 buildings. About China-Japan security dialogue. On December 25th, Japanese Foreign Minister Takeshi Iwaya visited Beijing, marking his first trip to China since assuming office in October. During the meetings with Chinese Premier Li Qiang and Foreign Minister Wang Yi, Both nations agreed to initiate security dialogues to address mutual concerns, including territorial disputes and military activities in the East China Sea. They also discussed easing visa requirements to promote people-to-people exchange. Now let's talk about the week from 30th of December to the 3rd of January. So economic indicators started the week with disappointing news from Chicago PMI, which came in at 36.9, significantly below expectations of 42.7. This index, which measures business activity in Chicago region, highlights a slowdown in both manufacturing and non-manufacturing sectors. A reading below 50 signals a contraction, and this sharp decline raises concerns about regional economic weaknesses. January 1st, 2025, it was a quiet day on the economy front as the United States observed New Year's Day. Markets were closed and no major data releases took place. But the holiday did not slow anticipation for the data-packed days to follow. From January 2nd, it was a busy day packed with significant releases. Initial jobless claims came in at 211,000, beating the expectation of 222,000. This lower than expected number suggests the labor market is holding up well with fewer people filing for unemployment benefits. It's a positive signal as we begin the new year. The second S&P Global Manufacturing PMI for December registered at 49.4, slightly better than the forecast of 48.3, but still below the 50 threshold, which signals contraction. While it's encouraging to see a slight improvement over the expectations, the manufacturing sector is still facing challenges as demand remains sluggish. Third, crude oil inventories showed a decline of 1.178 million barrels, a smaller drop compared to the forecast of 2.4 million, and far less than the previous week's significant reduction of 4.237 million barrels. This suggests demand for crude oil may not be as robust as anticipated, or that supply has picked up. This could impact energy markets in the weeks ahead. The week ends with two closely watched reports from the Institute for Supply Management, ISM. The ISM manufacturing PMI came in at 48.3, matching expectations but slightly below the prior months of 48.4. Sector remains in contraction territory, reflecting ongoing struggles with weak demand and production challenges. Meanwhile, the ISM manufacturing prices index rose to 52, above the forecast of 50.3, indicating that input costs for manufacturers are increasing, which could signal emerging inflationary pressures in the supply chain. A news review. Oil prices experienced a slight upstick as investors returned from the holiday season, supported by optimism surrounding China's economic recovery. Brent crude futures rose to $74.82 per barrel, while US WTI reached $71.91 per barrel. This increase is attributed to Chinese President Xi's commitment to fostering economic growth despite concerns over potential tariffs from US President-elect Donald Trump. In December, Chinese electric vehicle manufacturer BYD surpassed Tesla as the largest global seller for the second time, delivering 207,734 all-electric vehicles, a 9% year-over-year increase. For the fourth quarter, BYD sold about 595,000 cars, more than Tesla's nearly 496,000. Despite this, BYD shares dropped by 3.2% overseas, while Tesla's shares also fell by 3.2% in pre-market trading. Economists have warned that President Donald Trump's protectionist policies, intended to prioritize American interests, will harm global growth, overshadowing the benefits of his economic agenda termed meganomics. Surveys indicate that these policies are expected to trigger inflation and lead to cautious interest rate cuts by Fed Reserve. South Korea has announced policies to boost foreign investment inflows and domestic demand amid a severe economic and political crisis. The Finance Ministry plans to allow registered foreign financial institutions to participate in foreign exchange trading for export and import settlements from mid-January, expanding their ability to trade the won. This is part of the broader efforts to stabilize the financial markets. Wall Street headhunters are anticipating a significant increase in hiring activity in 2025. Factors contributing to this optimism include lower interest rates, pent-up demand, and higher IPO volumes expected under a more favorable Trump administration. Key sectors poised for hiring surge include technology, media, and telecommunications, along with the strong interest in healthcare and restructuring. December 30th, 2024, a Jeju Air Boeing airliner crashed at Muan International Airport, resulting in the deaths of all but 2 of the 181 people on board. This incident marks South Korea's worst aviation disaster in nearly 3 decades. Investigations are underway to determine the cause, with initial considerations pointing to a possible bird strike and questions regarding the deployment of wing flaps and landing gear during the emergency landing. The UK economy is projected to recover in 2025, with economists anticipating multiple interest rate cuts and accelerated growth despite the persistent inflation. Chancellor Rachel Reeves faces decisions regarding the potential tax increases, though many economists believe that she may avoid additional hikes. Global growth driven by the US and gradual interest rate reductions is expected to accelerate, although Eurozone may encounter stagnation. China's growth might fall short of the 5% target, but could benefit from the substantial stimulus measures. Now, let's review the following week from January 6th to January 10th. So the following week will bring a series of crucial economy indicators and events that provide insights into the US economy's health. These data points cover various sectors including services, labor markets, inflation, and monetary policy. Here's a detailed breakdown. Monday, January 6th, S&P Global Services PMI is forecasted to be released at 58.5, up from the previous reading of 56.1. This PMI index measures the performance of the services sector. A reading above 50 indicates expansion, as we said. The improvement suggests that services industry is growing at a faster pace, reflecting strong economic activity in this key sector. January 7th on Tuesday, we're expecting three major economic releases focusing on the US services sector and labor market. So the first one is the ISM non-manufacturing PMI for December month. It is forecasted at 52.1. This index tracks business activity in the non-manufacturing sectors. The forecast suggests a slower growth rate compared to the previous months, but still indicates a healthy economy. The second indicator is the ISM non-manufacturing prices for the month of December, forecasted at 58.2. This metric sheds light on price change within the service sector, offering a gauge of inflationary pressures. A higher number suggests rising costs for businesses, which could influence Federal Reserve policy decisions. And then the third one is the GOLTS job openings for the month of November, forecasted at 7.74 million job openings. The job openings and labor turnover survey report shows the number of available jobs in the economy, a key indicator of the labor market demand. A strong number reflects continued resilience in employment opportunities. For January 8th, on Wednesday, ADP non-farm employment change for months of December is expected to be released at 146,000 jobs added. This report is a precursor to the official non-farm payroll data released on Friday. It measures private sector employment change and provides a snapshot of labor market trends. 10-year note auction expected at 4.235%. The auction yield indicates investor appetite for the US government bonds, reflecting the market sentiment on inflation and interest rates. Higher yields suggest concerns about rising borrowing costs. January 9th of 2025, on Thursday, the US observes a public holiday which may result in lower market activity during the day. A FOMC meeting minutes. A Fed rate change unlikely this month. 89% odds of no hike. This minutes from the Fed Reserve Open Market Committee meeting will offer detailed insights into the Fed Reserve's monetary policy discussions, including the views on inflation, interest rates, and economic growth. Another initial jobless claims. This weekly report tracks the number of Americans filing for unemployment benefits for the first time. It's a leading indicator of a labor market health. 30-year bond auction expected at 4.535%. Similar to the 10-year note auction, this provides insights into long-term market expectations for inflation and interest rates. On Friday, January 10th, 2025, three more key labor market reports will be released. Average hourly earnings month over month for December forecasted at 0.4% growth. This report reflects a change in wage and is a key indicator of inflationary pressure and consumer spending power. The second one is the non-farm payrolls forecasted at 227,000 jobs to be added. This is one of the most critical indicators of US economic health, showing the net change in employment excluding the farming sector. Strong payroll growth points to robust labor market conditions. And then the third one is the unemployment rate for the month of December, forecasted at 4.2%. The unemployment rate measures the percentage of the labor force that is jobless. A low and stable rate indicates a healthy labor markets. Talking about the economic outlook on oil prices, analysts project that oil prices will remain around $70 per barrel in 2025. This is attributed to ample supply and sluggish demand, particularly from China, which may temper any significant price increases. Kicking off in Las Vegas, the CES 2025 runs from January 7th to 10th. This premier technology event showcases the latest innovations in consumer electronics, drawing global attention from industry leaders and tech enthusiasts. Investors keep a close eye on the stock market, analyzing trends and company performances. Notably, companies like Nvidia and Tesla are under scrutiny for their upcoming product announcements and year-end reports, which could influence market dynamics. To sum up, next week's economic data releases cover a broad spectrum of the economy, including the services, the labor markets, and the inflation. These indicators are crucial for market participants, policymakers, and analysts to gauge the current state of the US economy and its trajectory into 2025. Thank you very much for your attention. See you next time.